Bloomberg Audio Studios. Podcasts, radio, news.
The single best idea. And the single best idea was to have great conversations through the week. We succeeded. And a Friday you can let slip away in the summer. But in this odd bull market with the news flow, the president off to Scotland, it was an eventful Friday. David Rosenberg started us off from Toronto. And what I thought was fascinating was his bringing in inflation and any kind of persistent inflation with what the inflation-adjusted wage will do. Here's David Rosenberg on the coming job economy.
If we see cracks emerge in the labor market and we see a loosening up in the labor market, the Fed is going to feel quite a bit more relaxed that the goods inflation that we are seeing on the tariff file, if it doesn't feed into wages, that's going to be a comforting sign. So I'd say that the employment number in its entirety, the headline, the revisions, what the unemployment rate does, the participation rate, but also keep a firm eye on the wage number, because what's really important here, and everybody's waxing on about how great the U.S. economy is doing, I think it's rather mixed, is that real work-based income in inflation-adjusted terms is actually contracting. And right. That is going to be where, the inflation from the tariffs is going to hit the wall on the labor market. So we know the Fed's not going to do anything. I think they'll keep their cards close to their vest in terms right. of any guidance. The key is really going to be the labor market. That's what we're waiting for in terms of what it's going to mean for right. interest rates.
David Rosenberg there, and I would just editorialize, slipping into a Friday and a big weekend and all that. Grocery prices haven't pulled back. I just, am I scientific about it? No. Can I tell you how a bag of potato chips have changed? No. But I've just got this feeling out there that grocery prices, they're just migrating higher. Maybe that's a whiff of the inflation to come here. Maybe even with rents not coming down like they have so far this year, helping out that disinflationary tendency. What a great week of equity analysis on the show. We finished strong with Alicia Levine at BNY, a really, really astute conversation. Alicia Levine on the chosen few of the seven.
The top 10 stocks in the S&P, are about 38% of the S&P, which actually is on the low side as a percentage if you look at other global markets. So in Germany, the top 10 is over 50%. France, the same. Right. So if you look at other global markets, the concentration in the U.S. is not unusual. What I will say is this, is cyclicals are outperforming defensives here because the industrials are working, the financials are really working because with a deregulatory agenda, you have other parts of the market working. And the Mag 7 is sort of breaking apart, right? We're going to wind up with a new acronym here. But you need tech to work, and it must work because the behemoths of cash flow and margin growth are driving the rest of the S&P margin, right? The margins of the Magnificent Seven are double the margins of the rest of the S&P. So that has to work, and the CapEx spend must produce earnings. Must. It cannot just go into a black hole.
An important theme today. Sarah Hunt at Alpine Saxon Woods said the same thing as Ms. Levine of BNY. The basic idea is, okay, billions to CapEx in big tech, but there's got to be proof of concept out there into 2026. Our proof of concept is the commute across the nation. Thank you so much for how you choose to listen to Bloomberg Surveillance on YouTube. We're out there. Good morning, 99.1 FM in Washington, up to 92.9 FM in Boston. On these podcasts on Apple and Spotify and on YouTube podcasts, it's single best idea.